Tesla, once the king of electric cars with a market value of over $1 trillion, is now facing serious trouble. The company has lost hundreds of billions in value as Elon Musk struggles with massive vehicle recalls, angry investors, and growing competition. While Musk's attention seems focused elsewhere, as Tesla's stock price continues to fall, and with the company facing a $1 trillion collapse, thousands are wondering if the electric car giant can recover or if this is the beginning of the inevitable end for Musk's automotive dream. Tesla's financial decline. Tesla's story has taken a sharp turn in recent months. Once the darling of Wall Street, the electric car company has hit some serious bumps in the road. Let's look at what's happening with Tesla's money situation. The numbers tell a pretty shocking story. Tesla's profits have fallen off a cliff. Their net income, that's the money they have left after paying all their bills, dropped by a whopping 71% compared to last year. This isn't just a small dip, it's a massive drop that has investors really worried. When a company makes less money, people who own shares in that company often get nervous. That's exactly what happened with Tesla. The stock price, which shows how much people are willing to pay for a piece of the company, has been tumbling down. At one point, Tesla's stock was worth over $400 per share. Now it's hovering around $150. That's like having $40 in your pocket and suddenly finding only $15 there. This drop in stock price has huge consequences. Tesla was once worth over $1 trillion. That's a 1 followed by 12 zeros. Now, the company is worth less than half of that. Imagine if your savings account suddenly lost half its value. That's the kind of shock Tesla investors are feeling. Why does this matter? Well, when a company's value drops this much, it becomes harder for them to raise money to build new factories or develop new cars. It also means Elon Musk, who owns a big chunk of Tesla, has seen his personal wealth shrink by billions of dollars. Recent financial reports show other concerning trends. Tesla's profit margins, the percentage of money they keep from each car they sell, have been shrinking. They used to keep about 25 cents from every dollar of sales, but now it's closer to 15 cents. This happens when a company has to lower prices to sell more products, which is exactly what Tesla has been doing. Tesla's cash reserves are still healthy at about $15 billion, but they're spending money faster than before. They're pouring billions into new projects like robots and self-driving technology, but these investments haven't started paying off yet. Wall Street analysts, who are experts at studying companies, have been lowering their expectations for Tesla. Many who once predicted the stock would reach $500 or more are now setting much lower targets. The competition is also getting tougher. Other car companies like Ford, GM, and Chinese manufacturers are making more electric vehicles that compete directly with Tesla's cars. This means Tesla can't charge premium prices like they used to. For a company that was once growing its sales by 50% or more each year, Tesla's recent quarterly reports show growth slowing to single digits. This dramatic slowdown has investors questioning whether Tesla can maintain its position as the leader in electric vehicles. All these financial challenges are happening at the same time as Tesla faces quality concerns and recalls, creating a perfect storm that has shaken confidence in the company's future. And then came the most alarming sign of all: Tesla's customers were walking away. Global sales collapse. Tesla's troubles weren't just limited to their stock price and financial statements. The company faced a serious problem that was spreading across the globe. People simply weren't buying their cars like they used to. In Europe, the situation looked particularly grim. Tesla's sales dropped by a whopping 19% during the first quarter of 2023 compared to the same time last year. This wasn't just a small dip. It represented thousands of unsold vehicles and millions in lost revenue. Countries like Germany, which had once embraced Tesla enthusiastically, saw interest cooling as local car makers caught up with their own electric vehicles. Norway, a country that had been crazy about electric cars, showed an even more worrying trend. Tesla's registrations fell by 65% in June 2023 compared to the previous year. This was a big deal because Norway had been one of Tesla's strongest markets in Europe. The problems weren't limited to Europe. In China, Tesla faced fierce competition from local brands like BYD, which offered cheaper electric cars that appealed to Chinese buyers. As a result, Tesla's market share in China shrank significantly, dropping from 10% to just 7.8% in the second quarter of 2023. Even in the United States, Tesla's home turf sales growth slowed down. While they still sold more cars than the previous year, the rate of growth was much lower than expected. This slowdown happened despite Tesla cutting prices multiple times to attract buyers. Several factors contributed to this global sales collapse. First, competition increased dramatically. Traditional car manufacturers like Volkswagen, BMW, and Ford had finally caught up and were offering their own electric vehicles, often at lower prices than Tesla. Second, economic uncertainty made people think twice before spending money on expensive cars. With inflation and rising interest rates, many potential buyers decided to wait or choose cheaper alternatives. Third, Tesla's reputation took some hits. Quality control issues, delays in delivering promised features, and Elon Musk's controversial public statements all made some customers hesitant to buy a Tesla. The price cuts Tesla made to boost sales had mixed results. While they did help move some inventory, they also worried existing Tesla owners who saw the value of their cars drop overnight. These price reductions also hurt Tesla's profit margins, creating a difficult situation where selling more cars didn't necessarily mean making more money. Industry experts pointed to another concerning trend. Tesla's lineup was aging. The Model 3 and Model Y, their best-selling vehicles, had been around for years without major updates. Meanwhile, competitors were constantly releasing new, fresh designs that excited customers. By mid-2023, Tesla's global delivery numbers confirmed the troubling trend. The company delivered 466,140 vehicles worldwide during the second quarter. It was still an impressive number, but far below what analysts had predicted and what investors had come to expect from the once rapidly growing company. This global sales collapse represented more than just a temporary setback. It raised serious questions about Tesla's future growth potential and whether the company could maintain its position as the leader in electric vehicles as competition continued to intensify around the world. And as confidence crumbled, frustrated investors decided it was time to push back. Investor revolt. As Tesla's troubles grew, the people who had put their money into the company started to get really upset. These investors had watched Tesla's value drop by $1 trillion, and they weren't staying quiet about it anymore. Leo Thompson, who owned millions of dollars in Tesla stock, stood up at a meeting and said what many were thinking. "We trusted Elon with our money, and now look where we are." The room filled with nods and murmurs of agreement. Big investment groups like BlackRock and Vanguard, who controlled huge chunks of Tesla stock, began demanding answers. They sent letters to Tesla's board asking tough questions about why the company was losing so much money and what they planned to do about it. "The recalls are costing billions, sales are dropping, and the stock price keeps falling," said Maria Chen from Capital Investments. "Our clients are losing money every day, and we need to see real changes." The anger wasn't just about the money. Investors were frustrated with how Elon Musk was running things. Many felt he was spending too much time on his other companies like Twitter and SpaceX, and not enough time fixing Tesla's problems. Some investors filed lawsuits against Tesla, claiming the company hadn't been honest about safety issues with their cars. One lawsuit from the California State Teachers Retirement System said Tesla had hidden information about autopilot problems that led to the massive recall. At a tense online meeting, Ross Gerber, a longtime Tesla supporter, didn't hold back. "We've stood by Tesla through tough times before, but this is different. The company needs new leadership that will focus on making great cars, not jumping from one project to another." The investor revolt grew louder when Tesla's board members received a letter signed by owners of more than 25% of the company's stock. The letter demanded 3 big changes: bring in new board members who weren't just Elon's friends, create a clear plan to fix the quality problems, and consider finding a new CEO who would focus only on Tesla. Even Tesla's biggest fans were getting worried. Online groups of small investors who had always defended the company started posting concerns. "I believe in electric cars and Tesla's mission," wrote one investor on a popular forum, "but I'm down $50,000 and can't afford to lose more while the company figures things out." What really scared investors was seeing big customers back away. When Hertz announced it was canceling plans to buy more Teslas for its rental fleet, the stock dropped another 7% in one day. Some investors pointed to competition as a major concern. While Tesla's been dealing with recalls and Twitter drama, companies like Ford, GM, and Chinese makers like BYD have been catching up, explained financial analyst James Wilson. Tesla's head start is disappearing. As pressure mounted, the company scheduled an emergency investor meeting. The question on everyone's mind was whether Tesla could win back trust, or if the investor revolt would force bigger changes at the company Elon Musk had built. But with so much at stake, another question emerged. Could Musk's leadership and his growing political entanglements become Tesla's biggest liability? Political and leadership issues. Elon Musk's leadership style has changed a lot over the years. When he first became the boss of Tesla, people saw him as this super smart tech guy who wanted to save the planet with electric cars. But lately, his way of running the company and his political activities have raised some eyebrows. Musk has become more and more involved in politics. He used to keep his opinions mostly private, but now he shares them all the time on social media. He's posted thousands of messages supporting right-wing ideas and politicians. This big shift happened around 2022, when he even told people to vote Republican in the midterm elections. Later, he publicly endorsed Donald Trump for the 2024 presidential race. This political stuff might not seem like a big deal, but it's actually affecting Tesla in real ways. Many people who buy electric cars care about the environment and often have more liberal views. When they see Tesla's boss supporting politicians who don't prioritize climate change, it makes them think twice about buying a Tesla. Some longtime Tesla fans have even sold their cars because they don't want to support Musk's political views. His leadership at Tesla has also become a hot topic. Musk makes decisions really quickly, sometimes without thinking them through completely. He's famous for setting super ambitious goals and deadlines that Tesla often can't meet. Remember when he said Tesla would have 1 million self-driving taxis on the road by 2020? That didn't happen. Musk also runs his company in a way that some people find chaotic. He's fired lots of employees suddenly, including whole teams working on important projects. Last year, he cut about 10% of Tesla's workforce in a surprise move that shocked many workers. This kind of unpredictable leadership makes it hard for employees to feel secure in their jobs. Another big issue is that Musk splits his attention between many companies. Besides Tesla, he runs SpaceX, Neuralink, The Boring Company, and now X, formerly Twitter. Many investors worry that he's stretched too thin and not giving Tesla the attention it needs during this tough time. His behavior on social media has also hurt Tesla's image. Sometimes he posts things that seem unprofessional for the CEO of a major company. He's gotten into public arguments with customers, journalists, and even government officials. This has made some people question whether he's the right person to lead Tesla through its current challenges. All these leadership and political issues have made investors nervous. The stock price has dropped partly because people are worried about Musk's decisions and behavior. Some big investors have publicly criticized him, saying he needs to focus more on fixing Tesla's problems and less on politics and his other companies. Tesla's board of directors, which is supposed to oversee Musk, has been criticized for not doing enough to keep him in check. Many board members are Musk's friends or people who have worked with him for years, so they might not always challenge his decisions when they should. As Tesla faces more competition and problems with its cars, Musk's leadership style and political activities are becoming bigger issues that the company can't ignore. With leadership under fire, a bigger question loomed. Could Tesla still guarantee the safety and reliability that once set it apart? Safety concerns and recalls. Tesla's safety record has become a major concern for customers, investors, and regulators alike. What was once seen as the safest car company in the world is now facing serious questions about its vehicles and technology. The biggest worry centers around Tesla's autopilot and full self-driving features. Despite their names, these systems don't actually make the cars fully autonomous. They're meant to assist drivers, not replace them, but some Tesla owners have misunderstood this, with tragic results. In the past few years, there have been several crashes where Tesla cars on autopilot hit emergency vehicles parked on the side of the road. The National Highway Traffic Safety Administration, NHTSA, has documented over 700 crashes involving Teslas using these driver assist features. Some of these accidents have been deadly. One particularly troubling case happened in 2022 when a Tesla Model Y on autopilot crashed into a motorcycle, killing the rider. The Tesla driver claimed he didn't see the motorcycle because the sun was in his eyes and he was relying on the car's systems to detect obstacles. These incidents led to a massive recall of nearly all Tesla vehicles in the United States, about 2 million cars. But this wasn't a traditional recall where cars go to a repair shop. Instead, Tesla sent an over-the-air software update to add more warnings and make it harder for drivers to misuse autopilot. Safety concerns go beyond just autopilot. In 2023, Tesla had to recall over 360,000 vehicles because the full self-driving software was allowing cars to speed and drive through intersections illegally. Again, this was fixed with a software update, but it raised serious questions about how thoroughly Tesla tests its systems before releasing them to the public. The company has also faced problems with its basic car parts. Some Model 3 and Model Y vehicles had faulty seatbelt sensors, others had issues with their power steering. The Model S had problems with its front trunk latch, which could cause the hood to fly open while driving, obviously very dangerous at high speeds. Perhaps most alarming are the battery fire concerns. While electric vehicle fires are actually less common than gasoline car fires, when Tesla batteries do catch fire, they're extremely difficult to put out. Firefighters have reported needing up to 30,000 gallons of water to extinguish a single Tesla fire, and the batteries can reignite hours or even days later. All these safety issues have damaged consumer trust in Tesla. People who once saw the company as revolutionary are now questioning whether Tesla's approach of releasing features quickly and fixing problems later is appropriate for something as important as car safety. Regulators are paying closer attention too. Besides the NHTSA investigations, the Justice Department has been looking into Tesla's claims about autopilot capabilities. If they determine that Tesla misled consumers about what its cars can do, the company could face significant fines or other penalties. For a company already dealing with falling sales and increased competition, these safety concerns couldn't come at a worse time. Each new recall or crash report makes potential customers more hesitant to buy a Tesla and gives competitors a chance to position themselves as the safer alternative. Tesla is no longer untouchable, and the cracks are finally showing. Let's be blunt, Tesla's recent recalls aren't just bumps in the road, they're warning signs. For a company that built its brand on innovation and safety, the idea that thousands of vehicles now need urgent fixes shatters the illusion of perfection Elon Musk has carefully crafted. And while Tesla fans still cling to hope, this time, recovery won't be as easy. Why? Because the competition has caught up and in many ways surpassed Tesla. Legacy automakers like Ford and Volkswagen are producing EVs that are cheaper, more practical, and increasingly appealing to mainstream buyers. Meanwhile, Chinese companies like BYD are flooding the market with electric cars that Tesla can't compete with on price or scale. The emperor of EVs may be losing his crown, and fast. For investors, the situation is turning toxic. Many who bought in at peak hype are watching their wealth evaporate, and some are beginning to wonder, was Tesla ever worth its insane valuation, or was it just another speculative bubble? As the stock tumbles, so does the myth that Tesla was immune to market forces. Wall Street is waking up to a hard truth. It bet big on a brand, not a sustainable business model. And let's not pretend this only affects Tesla. The recall drama casts a shadow over the entire electric vehicle movement. Are EVs truly ready for mass adoption, or did we jump the gun? If consumer confidence takes a hit, governments might have to rethink their ambitious green transition timelines. In other words, Tesla's failure could slow down global climate policy. Meanwhile, Elon Musk, once hailed as a genius, is now seen by some as a distracted liability. With his attention split between Twitter meltdowns, rockets, and AI wars, Musk's grip on Tesla appears weaker than ever. There are growing whispers that it's time for him to step aside or be pushed out. The company needs a CEO, not a celebrity. In the background, traditional automakers are forming strategic alliances, tech companies are eyeing the auto space, and battery suppliers are reassessing who's worth betting on. Tesla no longer looks like the future, it looks like the past struggling to stay relevant. Ironically, all this chaos could benefit consumers. If Tesla is forced to slash prices or actually innovate again to stay afloat, the average car buyer wins. But that silver lining doesn't erase the bigger picture. Tesla is at risk of becoming just another cautionary tale in a tech industry littered with overhyped icons. Make no mistake, this could be the beginning of Tesla's decline. Not the end of electric vehicles, but the end of the idea that one man, one company, could dominate the future of transportation alone. The EV revolution will continue, but Tesla might no longer be its leader. It might just be the brand that sparked the movement and then got left behind.